Turning points don't announce themselves with fanfare, they murmur. And presently, that murmur is intensifying. And while most people are consumed by commotion, news, and anxiety, a subtle transformation is occurring beneath the exterior. The gold-to-silver ratio, one of history's most ancient financial indicators, is declining rapidly, returning toward levels that have only emerged when fortunes were created and perspectives were challenged. This isn't exaggeration. This is a pivotal instance. And instances like this don't await authorization. I recall the initial occasion I genuinely grasped this principle, not from a graph, but from existence. Observing people who labored more intensely than everyone else still falling behind, while a few composed, patient individuals advanced silently. They weren't more intelligent. They weren't more fortunate. They simply understood when to act and when to wait. They comprehended that cycles govern everything: markets, emotions, achievement, even personal development. And those who honor cycles cease pursuing and begin positioning. Consider this momentarily. Gold represents fear. Silver represents expansion. Gold is preservation. Silver is growth. When the ratio declines, it's not merely a market indicator, it's a psychological one. It indicates capital is rotating from safety into opportunity. The same way in existence, advancement begins when you cease concealing and begin stepping forward. The most accomplished investors didn't await confirmation from the masses. They advanced when circumstances felt uncomfortable, uncertain, even isolated. Examine history. Every substantial silver movement occurred when people underestimated it. In those instances, silver didn't merely climb, it erupted. But the people who benefited weren't fixated on screens constantly. They constructed positions gradually. They maintained discipline. They treated investing like cultivating a tree, not activating a switch. And that's the metaphor most people overlook. Prosperity doesn't originate from excitement. It originates from alignment between patience, timing, and conviction. Here's the deeper principle. When the ratio compresses, silver doesn't require perfection to succeed. It only requires normalization. Just like in existence, you don't need to be flawless to achieve. You need consistency and trajectory. Many entrepreneurs who constructed empires didn't initiate with massive capital. They initiated with asymmetric opportunities. Small risk, substantial upside. Silver has always been that asset. Limited downside, explosive capability, but only for those who prepare before the movement, not afterward. So what does action resemble? It's mundane, and that's why it functions. Establish a plan. Accumulate intelligently. Don't wager everything, but don't remain frozen either. Construct habits that reward patience. Study cycles instead of headlines. Decrease emotional decision-making. In existence and investing, emotion is the tax paid by the unprepared. Discipline is the advantage of the composed. And remember this: every substantial breakthrough feels evident in retrospect and frightening in the present. The people who altered their financial trajectory didn't wait until it felt safe. They waited until it felt correct. They trusted data, history, and their own preparation more than commotion. When the ratio shifts, it shifts rapidly, but the preparation occurs silently beforehand. This isn't merely about metals, it's about mentality. It's about recognizing when you're being offered leverage, financially, mentally, spiritually. Growth always poses one question. Will you remain comfortable, or will you position yourself early? The gold-to-silver ratio never collapses when everyone is enthusiastic, when social media is clamorous, when headlines are broadcasting opportunity. It collapses in silence, when attention is elsewhere and conviction feels uncomfortable. This is how genuine transformations occur, not just in markets, but in existence itself. Opportunity almost never emerges with applause. It manifests disguised as tedium, doubt, or confusion. And most people overlook it because they're trained to react, not to observe. When the ratio begins to compress, it's not announcing itself to the masses. It's signaling to those who comprehend cycles, history, and human conduct. The majority awaits proof, certainty for someone else to advance first. But by the time excitement materializes, the advantage has already vanished. This sequence repeats across every meaningful achievement narrative. The most significant breakthroughs occur when participation is minimal and conviction is fragile. In investing, this is the phase where intelligent capital positions silently. There are no celebrations, no viral content, no dramatic headlines, just accumulation, patience, and discipline. The same applies to personal development and enterprise. The instances that alter everything often feel uneventful while they're occurring, rising early when nobody is observing, learning when there's no compensation, constructing when there's no applause. These are the invisible stages that precede visible achievement. The collapse of the ratio during neglect reveals a deeper truth about worth. Value isn't generated by attention, it's disclosed by contrast. When silver is disregarded while gold is celebrated, when fear is priced in and expansion is dismissed, the imbalance becomes opportunity. The market isn't malfunctioning in these instances. It's efficient in exposing emotional conduct. People overpay for safety and underpay for capability, just as they overvalue comfort and undervalue effort in their own existences. Those who achieve learn to advance against emotional extremes. They don't require excitement to act. They require clarity. They comprehend that discomfort isn't danger. Silence isn't absence. Stillness isn't stagnation, it's preparation. Every substantial transformation requires a period where conviction must exist without validation. This is why opportunity feels isolated. Acting early means accepting uncertainty. It means trusting process over popularity. It means comprehending that advancement begins when you're willing to be early, incorrect for a while, and patient long enough for reality to align. The ratio doesn't collapse because people suddenly believe. It collapses because a few prepared individuals advance while the majority is still awaiting permission. If this message resonated with you, you're already reasoning differently than most. Support the channel by engaging with the content. It contributes more than you realize. Subscribe so you don't miss instances like this when they matter most. Share this with someone who's serious about constructing genuine prosperity, not pursuing illusions. Remain composed, remain patient. And remember, those who comprehend cycles don't panic, they prepare. Gold has always been associated with protection, stability, and the instinct to preserve what already exists. Silver, conversely, has always carried the energy of movement, industry, and expansion. This contrast isn't accidental. It reflects two very different human behaviors that manifest not only in markets, but in existence choices, careers, and personal development. Gold is selected when people desire safety. Silver is selected when people are willing to advance. When fear elevates, capital flows into gold. People seek shelter. They desire something that feels solid, familiar, and proven. This mirrors how individuals conduct themselves during uncertainty. They grasp routines, previous identities, and comfortable roots, even when those roots no longer lead to development. Preservation feels intelligent in instances of strain, but preservation alone never generates advancement. It only protects what already exists. Silver enters the scenario when confidence begins to return. It's connected to manufacturing, technology, energy, and transformation. It shifts with economic expansion and innovation. Selecting silver is an act of conviction in the future. It's a declaration that development will continue, that demand will elevate, and that systems will rebuild stronger than before. In existence, this is the instance someone invests in acquiring a new ability, initiates an enterprise, or accepts a calculated risk instead of remaining frozen by caution. The most accomplished people comprehend when to preserve and when to expand. They don't confuse safety with achievement. Gold protects prosperity, but silver multiplies it. The identical balance applies to mentality. There are seasons to defend and seasons to advance. Problems emerge when people remain in defensive mode excessively long, mistaking caution for wisdom and hesitation for intelligence. Every substantial transformation requires an expansion phase. That phase always feels uncertain because development stretches capacity. Silver embodies that stretch. It's more volatile, more emotional, and more misunderstood. But volatility isn't chaos, it's movement. Without movement, nothing new is constructed. Without expansion, preservation eventually transforms into deterioration. Those who achieve lasting achievement learn to interpret these signals within themselves. When fear dominates, they protect. When opportunity emerges, they expand. They don't wait for complete certainty because certainty only materializes after development has already occurred. Silver rewards those who act when expansion is commencing, not when it's evident. Development is never comfortable at the initiation. It's selected by those willing to exchange short-term stability for long-term advancement. Every substantial silver movement in history commenced in a period that felt quiet, uncertain, and almost insignificant to the public. There were no celebrations, no mainstream enthusiasm, no widespread conviction that anything meaningful was about to occur. Silver was typically dismissed as tedious, outdated, or irrelevant, and that dismissal was precisely what generated the opportunity. Markets don't reward attention. They reward positioning before attention materializes. When silver initiates movement, it seldom provides advanced warning to the masses. The early stages are slow and frustrating. Price drifts, sentiment remains weak, and conviction is constantly examined. This is where most people exit. They interpret silence as failure and sideways movement as wasted time. But history demonstrates that this phase isn't stagnation, it's accumulation. It's the market transferring ownership from impatient hands to disciplined ones. The identical sequence manifests in enterprise and personal development. The foundation of achievement is constructed long before recognition. The entrepreneur labors in obscurity. The investor studies when nobody else cares. The athlete trains while the spotlight is elsewhere. Advancement compounds invisibly initially. By the time it becomes evident, the heavy labor has already been executed. Silver's explosive movements have always emerged after extended periods of neglect. When demand quietly constructs and supply contracts beneath the surface, price doesn't elevate gradually, it reprices violently. Those observing from the exterior believe it occurred overnight. But for those positioned early, it was years in the creating. This misunderstanding causes most people to pursue rather than prepare. Public confirmation always materializes late. Media attention peaks near tops, not beginnings. By the time silver becomes a headline, the straightforward gains are already behind. This is why depending on consensus is hazardous. Consensus forms after opportunity has already been diluted. The masses don't generate trends, they react to them. Comprehending this transforms how choices are made. Instead of questioning what everyone believes, accomplished individuals question what is being disregarded. They seek assets, abilities, and opportunities that feel undervalued, misunderstood, or prematurely dismissed. They accept discomfort as a signal, not a warning. Silence is where conviction is constructed. Quiet periods compel clarity. They eliminate emotional commotion and expose whether conviction is genuine or borrowed. Those who can remain steady without validation develop an advantage that cannot be instructed. Silver rewards this temperament. It shifts when patience has already been exhausted. The genuine movement commences only after most people have ceased observing. Cycles govern everything, whether people acknowledge them or not. Markets shift in rhythms of expansion and contraction, just as existences shift through phases of development, struggle, confidence, and doubt. Those who attempt to forecast precise instances often fail because prediction assumes command. Those who master respecting cycles achieve because patience aligns with reality. The greatest advantage isn't understanding what will occur tomorrow, but comprehending where you are in the cycle today. In investing, cycles punish impatience and reward endurance. Prices shift faster than emotions can adapt. And most errors are made not from lack of intelligence, but from lack of time tolerance. People enter excessively late, exit excessively early, and confuse short-term movement with long-term trajectory. When silver lingers in undervalued phases, it examines conviction, nothing dramatic occurs, and that stillness pushes many to abandon their positions. Yet this is precisely where opportunity matures. Existence follows the identical structure. Advancement is seldom linear. There are periods where effort seems disconnected from outcomes. Abilities are developed without recognition. Choices feel unrewarded. This is the compression phase, where pressure constructs invisibly. Those who surrender here assume something is incorrect. Those who remain comprehend that compounding functions silently before it functions visibly. Prediction concentrates on being correct. Patience concentrates on being positioned. Being correct once has minimal impact if discipline is absent. Being patient consistently transforms results. The most accomplished investors and entrepreneurs don't obsess over precise timing. They construct frameworks that enable them to remain engaged long enough for cycles to complete. They prepare for volatility instead of fearing it. Silver is a principle in this truth. Its greatest movements don't occur because someone forecasted the exact bottom or top. They occur because capital stayed present through the entire cycle. Those who benefit most aren't the fastest thinkers, but the most composed holders. They accept uncertainty as part of the progression rather than a signal to exit. This mentality shifts how risk is perceived. Risk isn't volatility. Risk is abandoning a well-reasoned position because of impatience. The incapacity to wait destroys more prosperity than poor analysis ever could. Cycles demand respect, not command. When you cease attempting to compel results and instead align with timing, pressure transforms into leverage. Patience isn't passive, it's active discipline. It requires confidence without reassurance, and clarity without confirmation. Those who master this principle cease reacting and begin compounding. They permit cycles to complete their labor, understanding that every phase has a purpose and every compression precedes expansion. Asymmetric opportunities are the foundation of exceptional results. There are situations where the downside is limited, controlled, and survivable, while the upside is open-ended and transformative. This imbalance is what enables ordinary choices to generate exceptional outcomes over time. Prosperity is seldom constructed by certainty. It's constructed by recognizing when the reward far outweighs the risk and possessing the discipline to act before that imbalance vanishes. Most people misunderstand risk. They assume risk means volatility or uncertainty. But genuine risk is exposure to permanent loss without meaningful upside. Asymmetric opportunities reverse that equation. They permit errors without destruction and achievement without ceilings. This is why they attract the most thoughtful investors and entrepreneurs. They comprehend that succeeding substantially doesn't require succeeding frequently. It requires being positioned when asymmetry is present. Silver has historically represented this dynamic. When undervalued and disregarded, its downside is often defined by concrete utility and intrinsic demand, while its upside is driven by repricing, scarcity, and sudden shifts in sentiment. This generates a rare environment where patience can outperform precision. You don't require perfect timing. You require sufficient exposure to benefit when the imbalance corrects. The identical principle applies beyond markets. Initiating an enterprise, acquiring a high-value ability, or investing in personal development often carries limited downside but massive upside. The expense is time, effort, and discomfort. The compensation is leverage, independence and development. Those who comprehend asymmetry select routes where failure instructs but doesn't destroy, and achievement compounds without restraint. People who avoid these opportunities typically do so because results are uncertain. They prefer predictable mediocrity to uncertain capability. This preference feels safe, but it gradually erodes momentum. Asymmetric opportunities demand courage because they require acting before validation. They request conviction and progression rather than guarantee of result. Those who achieve learn to structure their existences around favorable odds. They control position size, manage exposure, and remain emotionally neutral. They don't pursue excitement, they construct quiet conviction. When the payoff materializes, it often appears sudden from the exterior, but internally it's expected. Comprehending asymmetry transforms decision-making. Instead of questioning what might go incorrect, the question becomes, what occurs if this functions? Instead of concentrating on short-term discomfort, focus shifts to long-term leverage. This mentality doesn't eliminate fear, but it prevents fear from governing behavior. And when opportunity presents limited downside and meaningful upside, hesitation becomes the greatest expense. Those who recognize this early don't need to forecast results. They simply remain present long enough for probability to express itself. Discipline and positioning matter far more than capturing the perfect instance. Most people believe achievement originates from precise timing, from entering at the exact bottom and exiting at the exact top. This conviction generates paralysis because perfection is impossible. Those who wait for the ideal instance typically end up observing opportunity pass them by while they search for certainty that never materializes. Positioning is about readiness, not perfection. It means being involved early enough with a plan robust enough that timing becomes a secondary factor. The most accomplished investors seldom obtain the finest price, but they consistently obtain favorable prices because they're present when it matters. They concentrate on probability, not precision. Over time, probability outperforms brilliance. This principle extends beyond markets. In careers and personal development, people frequently wait for confidence before accepting behavior. They wait until they feel ready, qualified, or fearless. But confidence isn't the prerequisite for behavior. Behavior generates confidence. Those who position themselves early develop abilities, relationships, and experience that compound, while those waiting for perfect circumstances remain stagnant. Discipline maintains positioning intact. Without discipline, even a favorable position collapses under pressure. Discipline means following a plan when emotions demand deviation. It means resisting the urge to react to every fluctuation. In investing, this might mean maintaining through volatility. In existence, it might mean staying committed when advancement feels slow. Discipline transforms capability into outcomes. Silver rewards this approach. Its movements are often sharp and sudden, leaving minimal time to react. Those who attempt to time the movement typically miss it. Those already positioned experience the movement as a release of pressure rather than a surprise. They're not scrambling to enter. They're managing what they already constructed. Perfect timing is a myth sold by hindsight. Charts make past movements appear evident, but in present time, uncertainty dominates. Discipline enables people to survive uncertainty without abandoning logic. It generates emotional stability, which is the genuine advantage in any competitive environment. Positioning also decreases strain. When a plan is established, choices become simpler. Instead of reacting, you respond. Instead of guessing, you execute. This clarity liberates mental energy for long-term reasoning rather than short-term anxiety. Those who achieve learn that consistency defeats brilliance. Small, repeated behaviors accepted early outperform dramatic movements accepted late. Discipline ensures those behaviors continue even when motivation diminishes. Positioning ensures that when opportunity accelerates, participation is already secured. Together, they transform uncertainty from an obstacle into an advantage. Emotional choices are the silent destroyers of capital, advancement, and momentum. They feel justified in the instance, logical even, but they're typically reactions to fear or excitement rather than responses to reality. Markets are designed to exploit emotion. Price movements provoke anxiety on the descent and euphoria on the ascent, pulling people away from their plans at precisely the incorrect time. When fear dominates, people liquidate what they should be maintaining. When excitement dominates, they purchase what they should be questioning. This cycle repeats endlessly, transferring prosperity from the emotional to the prepared. Composed preparation breaks this sequence. It generates distance between stimulus and response. That distance is where intelligent choices exist. Preparation commences long before behavior is required. It means defining risk, comprehending why a position exists, and accepting volatility as part of the journey. When preparation is solid, emotions lose their capability. Price movement becomes information rather than a command. This shift alone separates those who expand capital from those who constantly restart. The identical dynamic manifests in existence. Emotional reactions damage relationships, derail careers, and interrupt long-term objectives. A single impulsive choice can undo years of effort. Composed preparation in existence resembles establishing boundaries, constructing routines, and committing to long-term values rather than short-term relief. Those who master this gain stability that others mistake for fortune. Silver exposes emotional weakness more than most assets. Its volatility examines patience and conviction. Without preparation, swings feel personal. With preparation, they feel expected. Those who survive and thrive aren't emotionally detached. They're emotionally disciplined. They experience fear and excitement, but they don't obey them. Composure isn't indifference, it's command. It enables logic to function under pressure. In investing, this means adhering to accumulation plans during tedium and maintaining through volatility without panic. In existence, it means remaining concentrated during setbacks and humble during achievement. Preparation also constructs confidence. When choices are made beforehand, execution becomes automatic. This decreases strain and increases consistency over time. Composed preparation compounds just like capital. Small advantages accumulate silently, generating resilience that cannot be shaken by commotion. Those who depend on emotion require constant reassurance. Those who prepare require only patience. Markets reward the latter because preparation aligns conduct with reality rather than feelings. Composure isn't a personality characteristic. It's a practiced ability developed through structure, repetition, and discipline, and it becomes a powerful form of leverage when others are losing command. Every substantial breakthrough feels uncomfortable while it's occurring. There's uncertainty, hesitation, and a constant sense that it might not succeed. In present time, advancement seldom feels heroic or evident. It feels awkward, risky, and often isolating. People expect breakthroughs to materialize with clarity and confidence, but in truth, they materialize wrapped in doubt. Comfort is typically an indication that nothing meaningful is transforming. Reflecting backward, those identical instances appear inevitable. Hindsight smooths out fear and edits out hesitation. What once felt hazardous now appears like a logical step. This illusion causes many to underestimate how difficult development actually was. They perceive the outcome, not the resistance. They perceive the result, not the internal battle that preceded it. This sequence repeats across every domain. Investors doubt positions before substantial movements. Entrepreneurs question choices before breakthroughs. Individuals reconsider personal transformation right before evolution. The pressure peaks near inflection points. Discomfort intensifies because identity is being challenged. Previous convictions are breaking down, and the new structure hasn't completely formed. Markets reflect this psychology flawlessly. Silver movements feel incorrect before they feel correct. The lack of confirmation generates tension. Price behavior feels slow, confusing, or volatile. This discomfort isn't a flaw in the progression. It is the progression. It filters out those who depend on reassurance instead of conviction. Development demands tolerance for ambiguity. There's no clear signal that says continue or cease. That signal is internal. Those who advance learn to exist with uncertainty without rushing to resolve it. They resist the urge to seek relief through impulsive choices. Instead, they maintain space for the result to develop. Discomfort is frequently misinterpreted as danger. In reality, it's frequently an indication of alignment with transformation. When something genuinely matters, it stretches limits. It compels adaptation. It demands attention. People who avoid discomfort remain static. People who master enduring it evolve. Breakthroughs are seldom recognized in the instance because they don't announce themselves. They disclose their significance only after the transition is complete. By then, the risk feels evident, the reward seems earned, and the fear is forgotten. Those who comprehend this cease waiting for confidence to act. They accept discomfort as evidence that they're positioned near something meaningful.